When buyers think about the court's decision that is still to come, the price of XRP goes up. When you trade derivatives, your capital is at great risk. Because of this, you should only trade with money that you are ready to lose. Traders of derivatives might not be right for all buyers. Before you do anything, you should make sure you fully understand the risks and talk to a professional. It has to be done. On Thursday, there were no new events in the SEC v. Ripple lawsuit that investors needed to think about. Investors were very interested in what the court would say about the punishments for breaking our securities rules by selling XRP to institutional investors. In March, the Securities and Exchange Commission asked the courts for a penalty of more than $2 billion in an opening brief about possible solutions. The Securities and Exchange Commission also asked the courts for an injunction that would stop people from selling XRP to institutional buyers. In its remedies-related reply brief, Ripple said it was not continuing to break us securities rules and suggested a $10 million fine for doing so. Besides that, Ripple made it clear that there were no claims of theft in the case. The court may decide the case based on how it sees the actions that happened after the lawsuit. As agreed by the court, Ripple might be able to avoid an order and might have to pay a $10 million fine. When the complaint wasn't subject to the rules that govern securities in the US, XRP was sold to accredited institutional buyers. The Howey test says that UDL contracts used to sell XRP do not meet the requirements for an investment contract because they do not allow for either profit or loss. It's possible that investors are betting that US courts won't be able to say that OD contracts broke a stock laws. The Supreme Court of the United States of America came up with the Howey test, which is a set of 4 factors that can be used to figure out if an asset is an investment contract and, by extension, a security. It's up to Ripple to show that it doesn't meet any of the 4 conditions. One of the sides is the hope of making a profit. When an investor puts money into a business with the hope that it will succeed, they expect to get money back. In its case, Ripple said that the ODL contracts make it clear that profits are not allowed, which means that they follow securities rules after the complaint has been made. In the United States, while investors were waiting for the much-anticipated court decision, the Securities and Exchange Commission faced more resistance from the courts. The most recent court decision will affect the SEC's plans to appeal. Stuart Alderity, the chief legal officer of Ripple, presented the latest court order against the Securities and Exchange Commission SEC on Thursday, June 27th. The SEC was criticized by yet another court for breaking the Administrative Procedure Act by removing a rule that was supposed to apply to proxy advice businesses in a way that was not legal. Based on the details the court gave, Gensler directly ordered this illegal move. For some reason, the case wasn't about a cryptocurrency business. The way the courts feel about the SEC now became clear because of it. As part of his presentation, Alderode talked about the court ruling that looked at a rule for 2020 and the advice from Gary Gensler, who was recently named chair of the SEC, to look at the rule again. Gary Gensler, who is the chair of the SEC, might have a lot more problems next time. As the probe into possible conflicts of interest regarding cryptocurrency in close, the Office of Inspector General is almost ready to make a choice. W. Hinman is being looked into because he used to be the head of the Securities and Exchange Commission. A U.S. government watchdog, Empower Oversight, told the public in February what was going on with the IG's investigation. People say that William Hinman, who used to be head of the Securities and Exchange Commission, has a conflict of interest. When the SEC sued Ripple, Hinman was one of the most important people involved. It was in 2021 that Empower Oversight sued the Securities and Exchange Commission, saying that former SC officials had been unfair to XRP and Ripple. Empower Oversight says that Simpson Thacher, who used to work for William Hinman, gave him millions of dollars. There was a group led by Simpson Thacher that was pushing enterprise Ethereum. For the year 2018, Hinman told the press that Bitcoin and Ethereum were not seen as securities. When Hinman quit the SEC, he went back to work for Simpson Thacher to keep his job. It is interesting to note that in 2023, U.S. courts told the Securities and Exchange Commission to make public all internal talks in which Hinman was involved. Documents kept by the company show that Hinman kept meeting with Simpson Thacher even after the SEC's ethics section had warned him not to. The CC might have to give up on its plans to appeal the decision about the programmatic sales of XRP if the probe by the IG doesn't turn up any evidence. Investors would certainly be happy with a result like this. And it's likely that XRP would get back the $1 name. The legal process for Ripple gives people hope in the midst of ongoing fights. The court battle between the SEC and Ripple Labs, the company behind XRP, has been the talk of the cryptocurrency world since it started in December 2020. The Securities and Exchange Commission sued Ripple and said that the company's sales of XRP are not registered securities trades. Ripple has strongly denied these claims. A federal judge named Annalisa Torres made a big decision in July 2023. She said that selling XRP on secondary markets does not meet the requirements to be called a security sale. People in the XRP community spoke of a cautious but experienced confidence. Because of this partial victory for Ripple, the company's CEO, Brad Garlinghouse, recently made a vague mention to the fact that he thinks there will be a final decision by September. In his speech, he said that he hoped the long court case would end in Ripple's favor. However, there is still hope for the future of XRP and the people who have invested in it because of legal worries. The outcome of this lawsuit may set a standard for how other cryptocurrencies in the US will be regulated. The United States of America has also offered a prize of up to $5 million for the person or people who created one coin and other cryptocurrencies that were used in this scheme. The CC is getting tough. Many people in the cryptocurrency community think that the Securities and Exchange Commission (SEC) started what they call a widespread crackdown on cryptocurrency sites and other cryptocurrency sites. The Securities and Exchange Commission says that alternative cryptocurrencies are not listed securities. This means that they are subject to strict rules and regulations. Gensler has given a reason for this strict stance. He said that general non-compliance in the Bitcoin business was the reason. He says that the steps the SEC is taking are necessary to protect buyers and keep the market legitimate this way, but it has been criticized by people like Deaton, who say it is too strict and hurts small investors more than it should because they are often stuck in the middle of regulatory activities. The information given is not meant to be taken as trade advice. Any purchases made based on the information on this page are not the responsibility of the people who made them. Before making any investment decisions, you should definitely do your own study and consulting with a professional who knows what they're talking about.